Thought I'd just step on here just to kind of deliver an insight into the important events over the weekend. Just to kind of wrap up the week. We've obviously had payrolls and markets in the end. I mean, it's been a bit of a seesaw affair, but I guess in the end you've got a dovish response as the dollar weakens mildly. T-notes.
As a reminder, it is just 1 minute on that US.
Gold, well, trying to edge higher. Equities kind of in a bit of limbo. So in the end, as predicted, I guess, not the best trading event as far as payrolls go. But look, payrolls is done. That's behind us already, and it's definitely now, you know, all eyes on Sunday, and we have Italy's referendum. So this is the kind of next chapter in what's been a pretty extraordinary year for politics. Is this going to be the third domino? We've had domino 1 tipped, which is Brexit, which smashed into domino 2, which was Donald Trump. Domino 2 is now hitting domino 3, which is Italy, and is that going to fall or not? Let me show you the timeline. This election's happening on Sunday. Polls open 6 AM, close at 10 PM, that is. So they've got all day to vote. There's also international Italians, I say international Italians, Italians living outside of Italy that are definitely also able to vote and have already voted in the kind of postal vote. But look at the timings here I've got on the screen. This is what's going to happen. 10 PM is when the polling stations shut. All right, you're used to politics now and how it works after Brexit, then the US election. So we get a 10 PM closing of the polling stations. Right then, at that moment, you're going to have an exit poll. This is where TV stations are kind of all over it, and they'll be reporting what they believe to be the outcome of the referendum. Now, you got to be very aware of the fact that there's a precedent here in Italy whereby the TV stations have in the past got it wrong. So they have delivered an exit poll judgment on the winner, and actually they've been wrong. So this has to be taken into account. So at 10 PM, when the Italian TV stations start trying to make their judgment, don't necessarily think that's the trigger point then for the markets to make their major move. You might get I don't know, let's say the TV stations say that Renzi's lost by a margin of 60 to 40, well then fine, you might get some market movement, but I don't think you're going to get a full-on move. I don't think you'll get markets pricing in that full result there and then, because of that scenario where in the past they've actually got it wrong. All right, so there's going to be a little bit of doubt or a little bit of uncertainty as to whether the TV stations are correct. So what happens then? When are we actually going to get official confirmation then? So when perhaps are we going to get markets fully pricing in the result? Well, it's most likely going to come between 1 AM and 2 AM Monday morning. This is most likely where the final result of the domestic votes should be in, and we ultimately get a decision. Okay, so let me just show you on the polling where things stand, because in Italy what they have is a system whereby polling can only happen up until 2 weeks before the election, and then that's it. So we have been in the blackout period. There has been no updated polls for 10 days and more, actually 12 days. So what I'm showing you on the screen here is actually the final poll just before the blackout window hit. We've got 3 lines on here. We've got yes is black, we've got no is red, and then we've got the undecideds, the don't knows, is grey. And what you've seen as we approached November and into November, the undecideds, the don't knows, decreased and they started to make up their mind. And as that happened, we got a slight divergence with the no vote stretching its lead. So no, as of 12 days ago, was about 7 points ahead according to the polls. Okay, so people are expecting no. All right, what happens if it's a no? Let me go to this graphic, which is pretty complicated, but I'm going to have a go at trying to explain it. Let me make it a little bit bigger. So let's say it's no. Of course, well, actually, before we talk about no, let's just say it's yes. That would be the market's, the most positive outcome from a market's point of view. It doesn't, by the way, I mean, that's in the short term. A yes vote, arguably, if you actually delve into the politics of actually what Renzi's trying to get through in terms of reform, it's not necessarily the pathway to Italy emerging to become a growing economy again. It's not necessarily in the long run a positive move. There's certainly people out there who argue that actually if Renzi wins this referendum, there's a higher chance the five-star movement could actually come into government perhaps in the general election in 2018, but that's a different story, right? The short-term reaction, if Renzi wins, it's the least, it's the most unlikely outcome, and you'll probably get markets reacting positively. When I say markets, I mean equity markets will push higher. You'll see a rally in Italian bonds, for example, and certainly the Italian banks would be at the forefront of that sort of equity rebound. All right, but it's not likely going to be yes. It's most likely going to be no. Now here, obviously, the margin of loss becomes important, and we don't know what that's going to be. The polls say 7 points. Who knows? It could be 10. It could be more, right? But there's kind of two outcomes with a no vote, or if you see my graphic here, there's two directions on a no vote. That's one where Renzi stays as Prime Minister and one where Renzi steps down. Now Renzi, perhaps, well, he probably regrets it, but at the start of this year, he put his career or his job on the line by saying, if I lose this referendum, I'm going to resign. Now, he said that at the start of the year. That really turned this referendum into not really a vote on actual constitutional change, the detail of what he wants to do. It's more become a vote of confidence. All the opposition parties have been campaigning for no, not necessarily because they don't agree with the reform, it's because they want to boot Renzi out of office, right? So it's very much become a vote of confidence for Renzi's government rather than actually the underlying constitutional reform that's actually on the ballot paper. Anyway, he said he's going to resign, right? There's a chance he doesn't. There's a chance he kind of backtracks. I'd say that's unlikely because ultimately that would be disastrous for his credibility. So I think we don't go left here where Renzi stays as PM as a loss. Where Renzi does not resign in a no vote. What could happen if he loses and he resigns? Well, there's actually two possible directions here. Let's say Renzi loses and he resigns. Well, here, it's actually the president, Mattarella. It's actually his decision whether to accept Renzi's resignation or not. So just because Renzi resigns doesn't mean he's actually going to step down as Prime Minister. And here the president will have some control. Obviously, the president will be mindful of the uncertainty, the panic of Renzi stepping down, and perhaps he might actually refuse his resignation. So in the outcome, he refuses his resignation. What will probably happen in that point is we'll probably get a new government coalition. Renzi probably becomes the interim Prime Minister ahead of then a general election which might probably take place in 2018. Okay, but this will mean ultimately the government's dead in the water in terms of being able to put through any reform or new legislation. It really just then puts Italy's political system in limbo until the 2018 general election. So ultimately, no vote and Renzi stays isn't a good thing for the Italian economy. But I guess it avoids the disaster scenario, which people are panicking a little bit about, which is the Armageddon scenario, if you like, is that this referendum triggers a general election in early 2017. So what happens if Renzi resigns and the president accepts his resignation? well, then we have a 70-day period. And let me just switch to a timeline here. So on this one, we've got the vote happening. If it's a no vote, Renzi resigns. That then starts a 70-day period where the president essentially says to the political parties, sort out a government. Try and negotiate and form a coalition of parties that has a majority. Here you're going to get, well, this is uncertainty, right? Because we don't know how it's going to pan out. You're going to have the various political parties having meetings behind closed doors to see if they can cobble together some kind of new coalition. Okay, now in that circumstance, you're most likely going to find the Five Star Movement not getting into government, and that's because the Five Star Movement, that's Beppe Grillo's anti or EU skeptic party, they've got a kind of tradition of not getting involved with any coalition. So in the past they've refused involvement in any kind of cross-party coalition. So the idea would be that it would be up to the other parties to form a coalition, and therefore the Five Star Movement to stay out of government. Okay, and they've got 70 days to do that. There is a chance we get a technocratic government put in place. What happened in the 2011 Eurozone debt crisis, Berlusconi got kicked out of office by the bond markets essentially, and what the president did was he selected Mario Monti, a very much a sort of ECB or EU technocrat, and he charged Mario Monti with the job of forming a coalition, which he managed, and he managed to do in the 70 days, and fine, right? The real uncertainty kicks in if we start to get towards the end of the 70-day window and we have not had a coalition formed. This then, and I'm going to switch back to the other graphic, this then takes us down the right-hand side, you know, a snap general election. If you get to the end of the 70-day window, no coalitions formed, well, then you get a general election, okay? Just before we talk about the outcome of the general election and what that might mean thereafter, do bear in mind that if it's a no vote, and if Renzi does resign and we enter this 70-day period, well then all the other things that are happening through that 70 days. So don't forget, we've got a Fed meeting. We've talked about this earlier. You know, what's the rate hike trajectory for 2017? You know, that becomes less important then, because the Italian risk will rise to the top of the pile and continue to kind of drive and dominate market sentiment. The ECB are meeting next week. Now, this referendum could make tomorrow or next week's ECB meeting incredibly important. What the ECB have promised is if the Italian referendum leads to market panic and it leads to Italian yields spiking higher, the ECB have promised we're going to buy Italian debt. Now, Draghi could do that. He has the power to do it, but it would be politically incredibly negative within the ECB's governing council, with the likes of Weidmann and the kind of German representatives incredibly anti that idea. But so the ECB meeting next week could be just, you know, forget about QE extension, because if we've got Italian risk, then obviously QE extension is going to happen. But actually that risk reduces, and it's replaced by what are the ECB going to do about Italy? Are they going to buy Italian bonds? How much are they prepared to buy, and so on? Okay, so it could make next week's ECB meeting incredibly interesting. The big disaster scenario for financial market sentiment is if it's a no vote with a big margin of victory for no. Renzi resigns, the president feels like he has to accept his resignation, the people have spoken, if there's a huge majority on the no side, Renzi leaves, the 70-day window does not see a coalition formed, and we get an early general election first half of next year. This then brings into the ballpark the idea the Five Star Movement could get into power. Okay, now this is where you start to go down that path of, is Brexit just the beginning of what, and do we get that third domino falling over? Brexit, Trump, Italy, do we then get the fourth domino, which is the French presidential election, and so on, right? So, but you've got to understand, Monday morning isn't necessarily going to be markets blowing up in wild panic off a no vote. This situation is going to actually pan out potentially over a couple of months, all right? So do bear that in mind. What markets to watch? Well, here's a chart looking at the spread between Italian and German and indeed Spanish. Sorry, it's the spread, apologies. The white line is the spread between Italian and German 10-year government bond yields, and the yellow line is the spread between Italy and Spain. Okay, and you can see that the spreads have been going up, of course, pretty much throughout 2016, but particularly in the last couple of months, and Trump's win has accelerated that. And this is where Italian bond yields are climbing because of the Italian risk, and they're climbing faster than Spanish and German yields. Spanish and German yields are also going up, but just not as fast. This is political and then knock-on economic risk in Italy coming through in these spreads. So certainly watching Italian bond yields is a very important thing. Watching equities, and the best barometer in that space is Italian banks, and perhaps the best one of all, Monte dei Paschi, which is the Italian bank that's on the deathbed. Those shares will really be the most volatile and perhaps be a lead indicator, and perhaps will really drive market sentiment, especially if it's panic. You start getting limit down on Monte dei Paschi, and this kind of feeds through to market panic more broadly across the assets. Okay, but having said that, I don't think you're going to get this. I think the only way you get really big risk off Monday morning is if the no camp wins by some crazy amount. You know, if it's like 70% plus no, which is incredibly unlikely, but let's say it's 70% no, well then that really is a hammer blow. That is the final nail in Renzi's coffin, and you know, really could result in that general election early next year. Here's a heat map looking at the different outcomes and the market reactions. Final slide on this, and what we've got, I've kind of talked through some of this on the other map, but here we're looking at market reaction. Worst case scenario, as I've said, bottom right hand corner, the emergency red zone, early election 2017. Okay, top right, the most positive market outcome, Renzi wins, you get the reform done, and we move forwards with Renzi having a stable government. But by the way, we'll still probably have a general election in 2018, and just because Renzi wins this referendum, A, doesn't mean that's a good thing necessarily for the Italian economy, and B, still doesn't remove the idea that the five-star movement could win the election in 2018. Some people think Renzi winning increases the chances of five-star. So it's quite complicated. This isn't a Brexit and a Trump moment. I think the no vote will then lead to maybe a couple of months worth of uncertainty. It could be that it's a no vote, Renzi resigns, and we get a coalition formed by the end of next week, in which case fine. The Italian economy is then in limbo really, because ultimately there's no reform and the new government won't be able to reform either, and so they remain as an underperforming member of the Eurozone economic system. Okay, so this will be coming at you 10 p.m. through probably 1 a.m. Monday morning. We will get the result. It's most likely going to be a no. So we'll fully brief you on this, full rundown, Monday 8:30 a.m. Live from the Amplify office. We'll be giving you our thoughts and we're looking at the market fallout and reaction. So enjoy your weekends, guys, and get a good night's sleep Sunday, because you're going to need it. All right, bye.